Hello, everyone. Good afternoon, and welcome to the first edition of the COL's special webinar series. I'm Ed Martinez. I'm the head of COL Premium, and I'll be your moderator for the webinar session today. Before we proceed with the presentation, I'd just like to remind you guys some important reminders. First of all, wash your hands. Just saying it out there, just to prevent the spread of the COVID-19, which I think our experts will be talking, which our expert will be talking about this afternoon. Second, you will need at least 1 Mbps of internet speed to have good connection with our webinar series. Second, in order to make your presentations or your views faster, we encourage you to open only one window. So mamaya na lang tayo mag-surf o manood ng YouTube on the side. Just make sure na yung go-to webinar lang yung nakikita natin. And third, just in case you're wondering, you can also um hindi pala. Okay, lang. Main screen. Uh, you are all in listen only mode. Ayun. So there. We're just having a bit of technical difficulties. Can somebody just show it to the questions whether they're seeing this or not? Are they seeing it? There you go. I think you can see it already. So there. If you have any questions, there is a tab in the bottom right of the screen where you can put in all your questions there, and we will do our best to answer them later. Just to give you an outline of what's going to happen, first we're going to have our resource speaker do her presentation, and then later on we'll have a 30-minute Q&A. All right. So the session this afternoon is entitled "Investing in Today's Market Volatility." I'm sure most of you are quite concerned. In fact, we've seen that in our social media channels, especially over the past couple of days, where the market did pretty significantly bad. So without further ado, let me introduce our speaker. Our speaker is the Vice President and Head of Research of COL Financial, and was awarded third place as Best Equities Strategist in 2018 by the Fund Managers Association of the Philippines. As an industry expert, she regularly appears in ANC and writes a weekly column for the Philippine Daily Inquirer on stock market investing. Ladies and gentlemen, let's all welcome Miss April Lynn Tan.
Thank you, Ed. So I'll be starting with my presentation today. Okay, so I'd like to start out the presentation with this first slide. So if ever there's a straw that broke the camel's back, it was really the the COVID-19 outbreak, the intensification of it. Okay, so you can see how, hold on. You can see how, for example, it all started in December with China alerting the World Health Organization of the unusual pneumonia in Wuhan. And then, the first time that COVID-19, became a crisis in China, actually, when they started to quarantine cities in Hubei, and, the travel advisories against China, our market wasn't doing so bad. We just lost a little bit. Even when the World Health Organization declared it a global emergency, I mean, not so bad. See, we're still at 7,300. I think what really triggered the sell-off in the Philippine market was around February 24. Um, like a week earlier, around February 21, February 22, infections were growing exponentially in South Korea, and then there were infections in Italy and in Iran. I mean, the number of infections there were growing really rapidly, and because of that, the US market fell by 3%, S&P 500. And that was what caused the Philippine market and actually global markets to go down in a tailspin. And in March 11, finally, the World Health Organization declared COVID-19 outbreak as a global pandemic. And as of yesterday, the PSEI closed at 4,623.42. Really scary times for the year-to-date period. We're actually down by 40% already. So, the bad news is looks like things are going to get worse before it gets better. Right now, the infections have yet to peak. So the number of new cases, as you can see, as of yesterday, still up exponentially at 26,110. If we take out China, you can see that we're still at an exponential phase, actually. So the problem right now is actually outside of China and not in China anymore. And it's really, um, still growing exponentially, which is why it's still scary. We don't know when it's going to end. And the economic impact of COVID-19 outbreak is going to be severe. How will it impact the economy? First of all, there will be less consumer spending, less investment spending because of travel bans, business closures because of the lockdowns happening right, like what's happening right now in the Philippines. And a lot of jobs will be lost, so people cannot spend. And of course, we have our supply chain disruptions. Now, there are so many forecasts out there as to what will happen to GDP, but in all honesty, I think everybody's just guessing. So just to put things into context, I think China would be the best example. For the first 2 months of the year, you can see how the fixed assets investments have dropped 24.5%, industrial output down 13.5%, retail sales down 20.5%, and these numbers have exceeded the consensus forecast by a lot. So in other words, if somebody tells you, oh, I think it's the economy will grow like this, grow like that, drop by this, nobody knows. People are just guessing. And an unemployment rate of 6.2% is highest on record. Okay, so it's gonna be bad. And I think one of the things that I'd like to share with you right now, which a lot of people are, not so much aware, is that liquidity conditions globally are also tightening. For example, I just want to highlight how gold is considered to be a safe haven. But if you look at gold right now, you will see that, well, it's not acting like a safe haven because it has also gone down significantly after initially rising during January and February when people were looking for a safe place to put their money in light of what's going on globally. It's actually now down quite a bit from its high of around $157. And high yield bond spreads. Okay, this is the spread of say junk bonds or lower rated bonds relative to the treasuries in the US. So usually when there's a crisis, notice for example in 2002 when the dot-com bubble burst, syempre yung access to credit ng mga less desirable borrowers, it jumped all the way to 10.14% above the yields of, say, US Treasury, like the 10-year bond rate. So maybe, for example, if the 10-year bond rate right now is 1.5%, the junk borrower would have to pay 11.2% in the US. During the global financial crisis, this number climbed up to 18.3%. And right now, we're at 9.7%. So, nagkakaroon din itong tightening of liquidity. So, even if you buy bonds right now, it's not a safe haven. Okay, so difficult time. So what's happening right now is prices of all financial assets are falling. It's not only stocks, not only Philippines, it's the US, even bonds. bond spreads are widening. And why is this happening? First, there's the negative economic impact of COVID-19. Syempre, pag nagpautang ka sa company, they're in a worse position to pay the borrowers. And secondly, and I think this one, not a lot of people realize, but I've been interviewed and I talk about this, which, in some ways it seems kind of silly, but that's just how it is. There's what we call forced liquidation. So what happens? First of all, prices of stocks go down because people are afraid. And when people are afraid, there will be more sellers than buyers, which is obvious, di ba? Ang problem is there's what you call the margin call because not everybody who buys stocks using cash. They also borrow money. And when you borrow money, di ba may triggers yan that you can only borrow up to a certain percentage of your equity. So, pag biglang lumaki yung lugi mo, there will be what you call a margin call. And if you cannot fund those losses with cash, the broker will be forced to sell your positions. And that's why you call it a forced liquidation. You don't have a choice but to sell. And then you also have the growing popularity of algorithmic trading. So given how fast the market has gone down and how steeply it has gone, algorithmic trading says like as long as certain thresholds are triggered, they automatically sell. No questions asked. Sell agad yan. So that one makes it even harder. And another thing that happens during difficult market conditions is increased fund redemptions. Kasi natatakot ang investors, tatawag sila sa mga brokers nila, sa mga fund managers, and they're gonna say, I want to sell my equity fund, I want to sell my bond fund, I want to get my cash now. And that aggravates the situation. So what this means is higher bankruptcy risk for highly leveraged financial institutions. And if you're a company that needs to refinance your debts, let's say may maturities ka due, it will be very difficult for you to refinance your debts right now, assuming it's a big amount, no? So that's another problem that is happening. Kasi a lot of people are wondering, wala namang problema yung liquidity ng company. Or sorry, wala namang problema yung fundamentals. Maganda naman yung earnings. Kahit pa magka-COVID-19, okay pa rin yan. Bakit yung share price down 30%, down 40%? So essentially, this is happening. Another part of it is also because um, you know, there's a forced liquidation going on right now globally, and this is causing prices to go down. Okay, but that said, the silver lining that I'd like to share with you that our initial projection that the outbreak will only be temporary still holds. um, I remember writing about comparing COVID-19 to SARS, and SARS in 2003 ended in July, and looks like that is still going to be the case, or at least based on what we see, no? Because first, China and South Korea have already seen the worst, and governments are taking the right steps to address the problem. This, in my opinion. So let me just share the first one. The China actually has already seen the worst. Okay, if you can look at this table here, the number of daily new cases in China peaked at February 13. Okay, and the number of um, newly infected versus newly recovered in China, um, so the number of new recoveries versus new cases crossed paths, or we will call this the golden cross because it's a bullish um, development. So in other words, if this happens, you'll have a peaking of the number of new cases. It happened in February 18. So I'll show you the next chart. Okay, so you can see how the number of active cases peaked at February 18 here. Okay, so what's the timeline? January 23, Wuhan and other cities of in Hubei were locked down. Um, so February 13, the new cases peaked, and a few days later, we saw the Golden Cross Day. Okay, So we define the Golden Cross Day as new recoveries exceeding new cases, which leads to the peaking of active cases here. Okay. And finally, March 13, Apple opens all 42 stores in China. So the reason why I added March 13 and the opening of Apple stores is because the skeptics will say, eh, yung China naman, ano yan eh, di ba? Hindi naman mapapaniwalaan yung numero niyan. Fake yan, fake, whatever. But if Apple decide, which is a private company, decides to finally open its stores after closing it in February, that means that probably on the ground, things are really improving. Kumbaga, nung time ng global financial crisis, we call this the green shoots of recovery. Meron na. Parang it's starting to look like spring again after a harsh winter. So for me, that's a very important date, okay? And South Korea, mas bago ang Korea, but we saw how on March 3, there was a peaking in the number of cases. And on March 13, they also enjoyed their Golden Cross Day, or where the newly recovered exceeded the newly infected people. So, yon. And then the timeline, okay, so on I think the important date would be Feb 20, when they realized that the number of infections were growing exponentially. Um, Natakot na yung mga residents. They practiced self-quarantine, and the government began mass testing for infection. So this is what's different. Whereas China quarantined the whole city, and a lot of countries like essentially banned Chinese travelers. What South Korea did was they just tested anybody and everybody. They're the most aggressive country in terms of testing for um, COVID-19 infections, which actually was a very good practice. So finally, March 3, new cases peaked. March 13 was the Golden Cross Day. Now, I know that yesterday, I think biglang nag-shoot up ulit yung number of cases because there was a shelter for old people na they had like a massive infection there. But then again, comparing it to the peak number of cases, it's still below. That's why I still think that at least, the worst is over. Baka lang medyo matagalan going to the normalization stage or the green shoots stage. Okay? So anyway, the reason why I think that July is still a good timeline for us is because right now the governments are taking the right steps to address the problem. First of all, despite initial denials and resistance, increasingly countries and governments are implementing lockdowns, quarantining measures. Okay, so all over the world, you'll see countries closing schools, prohibiting mass gatherings, closing borders. Okay? So, yung iba nga, 'di ba dati, pwede pang magsimba, ngayon bawal nang magsimba. Kasi yung iba sinasabi, pag nagsimba ka, gagaling ka. Pero ngayon, pinagbawalan na rin nila 'yon. So, bawal nang kumain sa restaurant, bawal ng dine-in, bawal mag-attend ng concert. So, it's not only in the Philippines, it's all over the world. You can go do a search online. You can't even count with your fingers anymore the number of countries that are doing this. Second, you have countries finally right now, again, initially, they were, um, not working on increasing the availability of testing kits. May politics pa involved. But now, they're inviting the private sector to actually develop more testing kits. I mean, I thought these testing kits were easily available. Apparently, it's not. It's a very complicated process. If you read the papers nga, ang sabi nga ni DOH, these testing kits are not like pregnancy test kits. You can't just buy it off the shelf and you put a little blood or put a little urine and then you'll find out if you're positive or negative. It's a complicated thing. So well, they're working on making it more available so more people can have tests, and will do better quarantining in light of that. And of course, a lot of companies are searching for vaccines to address the problem. Finally, the central banks are aggressively boosting liquidity. I think you know, during the Asian financial crisis, I remember the Philippines, dati pag may problema ka, it's unheard of to cut interest rates. Pag may problema ka, pataas ang rates mo. So, for example, in the Philippines, the IMF lent money to us, but they lent it at a very high rate. And we just had to swallow it because that was how problems were addressed before. Same thing happened in the 1921 Great Depression. The US also had to, or the Fed during that time, raised rates dramatically because they felt like they were addressing a bubble. And of course, since they didn't want the bubble to continue growing, they had to burst it by raising rates. But now I think the global central banks understand that there is a massive liquidity problem going on, and companies with no problems are going to become bankrupt or at risk of, at being bankrupt. So aggressively, they're doing this to increase liquidity. For example, the Fed has cut its rates to zero. So for this year, it has reduced rates by 150 basis points. So that's a lot. Lahat ng tinaas niya the past few years, sinoli na niya ulit. Tapos they resumed the quantitative easing or the buyback of bonds in the markets. Okay, 700 billion US dollars. I think they're also doing some 2 trillion in repos. So parang stealth QE nga tawag nila dyan. The European Central Bank is also engaging in quantitative easing. 750 billion euros is the budget, but I think they'll do even more if they need to. Our very own central bank has cut rates yesterday by 50 basis points after initially cutting it by 25 already. So they'll keep it low for as long as needed. They need to do it. And finally, there's fiscal stimulus going on. So for the US, right now, they're doing a 1 trillion US dollar stimulus. And part of this is giving each adult a paycheck of $1,200 and each child $500. So the details, they're now threshing it out. For the Philippines, it's 27 billion pesos. So essentially, around the world, people are, or the governments are finding ways to stimulate the economy because they know we're going to fall into a recession because of the COVID-19. Okay, so what is a possible scenario of the Philippines based on the timeline of China and South Korea? I mean, if we were to follow what's going on there and the number of days by which um, it took them to hit the peaking of new cases, the Golden Cross Day, or the peaking of the number of active cases, and the normalization of conditions, the green shoots nga, bumabalik na. So if that were the case, then maybe by the time that our quarantine is lifted, which is mga after Holy Week, no, April 14, 15, we'll probably have our Golden Cross Day already, which is good news. I don't know if the quarantine will indeed be lifted but by around early May, hopefully it really will be lifted, because if we do this quarantining right, then the number of cases should fall in a convincing manner, allowing the governments to let things slowly go back to normal for our country. Okay, so what about stocks? Going back to stocks. Just one thing I want to highlight at 4,600. I mean, when we started the year, we were already saying that stocks are cheap. But right now, just want to say that it's a lot cheaper. Usually I would use a 5-year PE band, but now I'm using a 10-year. And you can see, compared to the past 10 years, we've never been cheaper, the PSEI. So just to put things into context, because I know there are some skeptics, sasabihin nyo, oh, mababa siya, pero yung EPS nyo bababa rin. Let me just put things into context. Okay, so PSEI, our index is now down 49% from the peak of 9,078. During the global financial crisis in 2008, we bottomed after falling by 56%. So I did the numbers. If we were to fall by 56% from the peak, um, we would have to hit 4,000. So maybe in January, if you said when we were at 7.8, parang it's impossible for the PSEI to hit 4,000. Pero as of today, it looks like it is a real possibility, di ba? So it may happen soon if we were to follow the global financial crisis condition and fall by 56%. Konti na lang, malapit na tayo dyan. Secondly, at the current price, the implied drop in earnings is at least 38%. Okay. And what is 38%? Conservative ba yun or aggressive? My feeling is it is um, quite aggressive in the sense that EPS fell by only 27% during the global financial crisis. So may buffer ka na dito, margin of error. Um, and at the said level, it's the implied EPS of the index is returning to 2010, 2011 level. So I guess you ask yourself the question, once this crisis is over, are we going to be worse off than we were 10 years, 9 to 10 years ago? If you think the answer is yes, then by all means continue to avoid the market. If you feel like when things normalize definitely will be better than 9 or 10 years ago, then I think you should actually keep an eye on the market and consider starting to invest. Okay, and yun na nga, 9 times PE, we hit a low of 11 times PE during the global financial crisis. And finally, all stocks now trading below 10-year historical average PEs. So when I was doing the presentation on the market outlook this January, I said like maybe 80% of the stocks were trading below their 10-year historical average PEs. But now even the likes of SM Prime, URC, yung mga favorites ng mga investors sa even BDO, they're all trading below their 10-year historical average PE. So lahat ng stocks mura, lahat ng stocks very tempting at this stage. And why am I, you know, positive, or what is the reason why, we shouldn't be too negative at least? First of all, there's no systemic risk. I personally think that the COVID-19 crisis is not as bad as the global financial crisis because at the time, there was massive leverage, which, meant a lot of non-performing loans, especially in the US, because people were borrowing a lot of money and using mga all these derivative products, leverage, etc. And that's a problem that takes a very long time to address. And secondly, banks, global central banks are aggressively boosting liquidity. So the first time, I remember in 2008 when, here in the office we were talking about Ben Bernanke at the time. He was called Helicopter Bernanke because he was just flooding the whole system with a lot of money, and it was unprecedented, uncalled for. We felt like, I think this could be the wrong solution to the problem because nung time na yon sanay kami kung may problema, unahan mo na, hayaan mo nang mabankrupt yung mga bangko, and then those rich people with a lot of money would buy them at a very cheap price. Tapos na ang problema, di ba? But um, you know, the Fed did the bailout by boosting liquidity, and now it seems to be what a lot of people are doing. So it's an accepted practice already, and global central banks are doing it. So I think at least that will help companies recover right now. Okay. So that said, what is the strategy for you as an investor? Again, we already said this during January. So I think that you should stay invested. Let's say may hawak ka pa ngayon, tapos nakita mo, grabe, down na naman ng 40% since January. Ano bang gagawin ko? Bebenta ko pa ba to? Parang nakakatakot, ang daming problema. But I'm just saying, given how cheap prices are and the strong likelihood that we'll recover, and, given that the problem is not going to be a long-lived problem, I think we should still stay invested. But at the same time, um, manage your risk because, again, we're just guessing that this will be a short-term problem, but Um, it could go down some more. Things could get worse before it gets better, and the markets might not recover as fast, even though conditions are already improving. So, when you buy stocks today, have a long-term perspective. Diversify. Don't just buy one stock. Buy several stocks. Focus on blue chips, because most likely when they go up, when the market goes up, the blue chips will be the ones to go up first. And finally, limit your size to an amount that you can hold on to for a long period of time. Don't buy too much na you're not comfortable with. Okay, so in summary, the ongoing COVID-19 crisis is scary as things are expected to get worse before they get better, and the economic impact is expected to be severe. However, similar to SARS in 2003, we think there's a strong likelihood that the crisis will be over by July or the second half of the year, creating an opportunity for long term investors to buy stocks at bargain prices. China and South Korea have already seen the worst after practicing quarantining and massive testing. And governments around the world are slowly practicing these as well. And global central banks are also aggressively boosting liquidity to address possible liquidity problems. Valuations of stocks are pricing in a scenario that is worse than the global financial crisis, even though our current situation is not as bad, at least in our opinion. However, because nobody knows when and at what level the market will bottom, we would like to stress the importance of having a long term perspective and managing risk through diversification and proper asset allocation. So, just some closing thoughts, which I also shared during the market outlook this January. No price is too low for a bear or too high for a bull. So, prices are going down right now. Um, I recognize that prices or stocks are cheap, but I don't know if it will become cheaper. Okay. And next, what Warren Buffett has said: be fearful when others are greedy, and greedy when others are fearful. And we know now is the time to be greedy because everybody's afraid. And the stock market is a device for transferring money from the impatient to the patient. So patience is definitely a virtue during these difficult times. So with that, thank you very much, and I'm open to your questions.
All right. Thank you very much, April, for that very enlightening presentation. First of all, while we'd like to encourage everyone to ask their questions through our facility in the lower right corner of your screen. Think we have a couple, but before we start, April, I'd like to ask you my question. We've been getting this a lot from our social media channels as well as through emails that if the PSE already knows that there's a lot of fear in the market, why not just suspend trading?
Uh, well, we actually did suspend trading, and unfortunately, the market did not take that favorably. I think to a certain extent, people still want the liquidity, 'di ba? Actually,
Mhm.
one of the reasons nga bakit medyo binibentahan yung market natin is because it's not as liquid as the other markets. Now, if you take that liquidity angle, baka mas lalo pang ibenta ng mga tao. So, maybe that's not a good idea right now. Although, minsan, parang mabuti pa nga para hindi kayo magpanic, sara muna natin. Then we'll just open it when the number of cases actually peak, di ba?
Oo, that's right. Okay, so we have a question from one of our attendees here now for April. From now until the Golden Cross or the end of July, what can we expect from the market? Parang
I think
until matapos to.
right now, if we go back to the first slide, I'm sure you will share it naman, Ed, di ba?
Yeah.
You will see how I think the market, the, makita mo yung acceleration ng pagbagsak. Di ba initially, nung nagkaroon tayo nung COVID-19, which was when China first said that they had it and then they did their quarantine, hindi naman masyado mababa yung market eh. And the reason why the market is going down right now is because the US continues to go down. Okay, yun yung problem eh. So I think we will take our lead from the US, and as long as the US continues to go down, we can continue to go down. So there is a chance that the market will continue to fall. I think the probably people want to see first a peaking of the number of cases globally. Maybe if we already see that, medyo may alleviation of fears. And secondly, the central banks are successfully addressing these liquidity problems. I think probably those two things are important because right now it seems like hindi pa tapos yun eh. So medyo wait lang tayo. Hindi namin alam. Actually si Boss Edward, kausap ko nga last week. Ang sabi nga niyang famous quote niya, kung alam ko lang mayaman na ako. Kasi hindi natin talaga alam kung um, when we'll hit the low. But I think we'll have a webinar with Juan is here and he will help us naman technically to show formations which indicate a market low. And I think that would be very helpful for our viewers today. Um, to have some idea. But that said, even the technical indicators will not allow you to buy the ultimate low. It will at least show you that, okay, it's now safe to come back in if you are a trader. 'Di ba? It's more of that rather than, indicating that this is the ultimate low because nobody knows, 'di ba?
Hmm. Okay. All right. So I think there are a lot of people asking of about the possibility of averaging down. And there's one specific question here, April, about Jollibee Foods. Is it okay though, but to average down in such a company? From
Oh
Jasmine of
yeah, yeah.
BGC.
Yeah, definitely. I think averaging down is a good strategy right now. Kasi I think against ako sa averaging down. If you know that the company has a long-term problem, let's say, isang kumpanya parang poor management, natatalo sa competition, or sabihin natin yung company nagiging obsolete yung product, tapos bumababa, tapos sige, you're averaging down because feeling mo ayaw mong tanggapin na may problema talaga. But this time around, I think that's the right strategy because the problems that the market in general um, are encountering is short term in nature. Um, Things will get better definitely going forward, and valuations are now ridiculously cheap. So very rare, as I've showed you a while ago, in the past 10 years, never naging 9 times PE ang market.
Hmm.
So, very, very cheap, very rare itong pagkakataon na to. So, I think okay. Yun, buy slowly, buy a little bit at a time because, we don't know if prices can still go down, but definitely averaging down during these times is good.
Okay. We have a question here from Mr. Frank Ann. Hi, April. What's the best risk reward blue chip? What's the,
Ah,
yeah.
well, it depends, but for us, for example, you may want to consider buying some stocks that will be relatively resilient to the ongoing coronavirus crisis. So, ano ba yung mga kumpanyang yan? It could be the telcos. Kasi since we're all working from home, you will notice that we use more telco services, di ba? And not to mention, they provide cash dividends, di ba? 5-6% cash dividends. And then another would be some consumer stocks that are non-discretionary. You would have the likes of say URC, 'di ba? Instant noodles and 3-in-1 coffee, 'di ba? Yan. Alam naman natin may hoarding na nangyayari sa groceries. Then of course you have your Pure Gold, na malakas yung benta kasi yun lang mapuntahan ng tao, and 'di ba they need to hoard stuff, buy groceries because of the fear. So we have those, and finally maybe you can buy some power companies. Although sinabi na nila medyo humina yung power demand, but that said, it's not gonna dry up completely. So maybe you can prioritize these stocks because at least they will be relatively resilient to what's going on. And then maybe after they go up, you can rotate to the other stocks which are more sensitive to COVID. No.
Okay. And we have another question from Mr. Michael Lim. Given this current situation, do you believe that most companies will not give dividends this year? Yan, mukhang
Well,
tatamaan ba
it's
yung
hard.
earnings so much that they won't declare dividends?
Baka next year sila hindi magbigay kasi usually what companies will do is pay cash dividends based on last year's earnings. And
Mhm.
that said, also a lot of companies actually will have holding companies that rely on these cash dividends. So they will jeopardize their parent company if they don't pay out cash dividends. So I think magbibigay din sila. It's more of next year medyo mas nakakatakot baka hindi sila magbigay. But this year I think they will give.
Mhm. Okay. Eto ma'am, another question from one of our customers. Is it okay to sell some stocks at this point, given that I've lost already so much, in order to buy more blue chip? Parang okay ba mag-shift into more blue chip stocks?
Ah, I guess pwede rin. I guess if you're going to sell to buy, parang switching. Switching, okay. Pero kung sabihin natin, timing, that part I don't know. Hindi kasi ako expert sa technicals eh. Kasi
Oo.
baka, 'di ba, mag-rally. Siguro pag nag-rally, pwede. Pero I don't know.
Okay,
Pag
so when
switching,
you
I think that's
mm,
okay.
mhm, mhm. So when you say switching, you're really changing the percentage of your portfolio as a strategy, no? So
Yeah,
medyo
yeah.
mas permanent basis 'yun kaysa yung magta-time ka
Mm-mm.
lang
Mm-mm.
pagbagsak. Okay, ito medyo quite um, pessimistic. Do we expect some of the listed companies to fold up?
Ah,
Hindi naman siguro,
sa
sana naman
sa
hindi.
ngayon, well, that's what we're looking at right now. Mukhang hindi naman. Kasi unlike during the time of not even the global financial crisis. Remember during the global financial crisis, 1 year tayong bumaba pero nag-rebound agad tayo the next year because uh you know, given our lack of sophistication, we weren't buying those junk bonds, no? Tsaka doon sa mga complicated financial products that were available there, yung mga, di ba, yung alphabet soup of mga financial products, no? We weren't
Mhm,
that sophisticated. And aside from that, we were just recovering from the Asian financial crisis. I think to this day, the companies are still very much worried. So ito na lang
mhm,
ang isipin nyo. Nung Asian financial crisis, a lot of people were borrowing US dollar in US dollar because the interest rates were low and the Philippine peso debts were double digit. So, baborrow silang US dollar. So, nung nag-weaken yung dollar, bumaba yung value ng mga assets na pinamili nila, sabay nag-depreciate yung peso. So, patay talaga. But this time
mhm,
around, yeah, maybe dahil sa COVID-19, let's say if you're in the hospitality business, umutang ka, nagtayo ka ng hotel, patay ka, 'di ba? But um that said, 'di ba, tingnan niyo yung sinabi ni BSP yesterday. They didn't just cut rates. They said we will be more what do you call this? Permissive or lenient on the single borrower's limit.
mhm,
Um,
mhm,
Pati yung mga ibang mga requirements, yung mga, sige, pabayaan namin, di ka muna makabayad for the next 2 months. Yung gano'n. Because they understand, alam nyo naman, di ba, minsan, parang, you just have some bad times, but doesn't mean that your business is permanently hit or going to be negatively affected. So, that's very good. So, I think the chances of becoming bankrupt is very small. But of course, our base case scenario is that COVID-19 will last only up to the first half of the year. So, dapat they will be able to recover na by the second half.
Okay. Uh, so, ma'am, we have a question. Oh, so, is the Golden Cross Day for the Philippines be a good indicator to start accumulating positions in the stock market? Yan.
Okay, I think
Aantayin
if
ba namin
the
yun or
nako, sana mura pa rin. Yun ang
okay.
worry natin eh. Kasi, well, there's still a chance that it will be cheap. Maybe the most important Golden Cross Day is going to be for the whole world. Because people are so fixated naman on the US eh. Kasi di ba yesterday we were talking about how, for example, China and Korea are still being sold off right now, notwithstanding their Golden Cross days and the green shoots of recovery, etc. Kasi nga all eyes are still on the US and they're still right now suffering from liquidity problems. Pero when the time comes, kasi yung Philippines, uh, the exponential growth of infections happen more or less in line with the other countries. So baka sabay-sabay rin tayong mag-Golden Cross eh. So I don't know
Mhm.
if we will have the opportunity to wait for that day, which is why we're saying, maybe you should start buying a little bit right now. Konti-konti lang naman, pero siguro by the time na mag-Golden Cross yan, kung hindi pa natatapos yung buy orders nyo, medyo lakihan nyo na yung pagbibili nyo kasi it could mean that prices are soon going to go up.
Mhm. Ito, April, you've mentioned kanina yung telco or power being least affected. Ano naman yung mga ay sorry, nasagot na pala to. Oh, sorry. Which ones are going to be the worst hit by COVID-19? Ng mga
Marami,
sectors
marami
natin.
sila. Siyempre yung tourism talagang zero, 'di ba?
Mm, mm, that's right.
Tourism and maybe even the properties because the malls are closed. And then of course they can't collect rent and then they can't sell mga residential projects. And even the banks actually were thinking could be affected. Pero kasi for them it's more like uh, neutral to negative eh. Kasi negative in the sense that um, of course there will be some borrowers who cannot pay, no? So they might have to set aside provisions and we don't know what type of papers they own. They might have some mark to market losses. So it's more of that for the banks and of course you have the retailers na focused on discretionary items like mga damit, mga sapatos, mga whatever. Of course, those will be hit because wala namang bibili nun ngayon, 'di ba? Ang gusto ng tao grocery. So, I think those are the sectors that will be more sensitive and maybe even the ports, 'di ba? Trading between countries right now medyo wala masyadong trading nangyayari. So that would also be negatively affected.
Okay. Ito, one other question from our customer is, would you advise being selective in or investing in individual stocks or just buy an index fund instead?
Well, it really depends. Actually, in general, my bias is index fund. Kasi usually, pag retail investor tayo, we don't really have a lot naman of money, 'di ba? So, that said, para immediately diversified, bili na lang tayo ng index fund. And then maybe if you like some stocks pero they're only one or two or three, magandang 80% naka-index and then the balance of 20, you buy your other two or three favorite stocks. At least medyo diversified tayo.
Mhm. Okay. There's another question. Are we expecting any revaluation or revision of the fair values of the stock picks given the current market conditions? April.
Yeah, we will have to revalue it. But the problem is right now, I mean, how can we determine a good fair value when we don't even know um, how bad things can be? But definitely, uh, I don't think they will go up to the prices which we forecast them to go up. You know.
Mhm. Okay. Okay. This a question about REITs. So, April, what are your thoughts about REITs given the hit on the property sector?
It still depends because, like, even if you think about it, yung malls, well, probably you won't see foot traffic. Plus, of course, they have to give mga, what do you call that? They don't collect rent for 1 to 2 months. Eh, malamang next year, okay na rin naman yan eh. I think it's more of a delay rather than a permanent negative impact for, let's say, malls and other landlords. So sa totoo lang, no, I've been an analyst for more than 20 years, and this is the first time, if ever, SM Prime will have a lower earnings on a year-on-year basis. Kasi talagang, kung isipin mo, yung mall na yan, super resilient yan. Kahit anong mangyari, pupunta pa rin ng tao sa mall, di ba, gagastos pa rin ng pera. So if ever, it's a short-term issue. If ever people want to do a REITs and they're gonna put, say, yung mga mall assets, it will probably be a 1 year weakness. But next year, probably okay again. Unless, of course, we have another pandemic happening, no? So yun, maybe short term, it's a problem, but long term, hindi. But then, I just want to highlight, when you buy REITs, it's not also perfect. May mga pangyayaring tulad ganito na pwedeng bumaba yung income na matanggap ninyo. So it's not a risk-free product. There's also some risk. But then again, just I think it's for this time around, it's a short-term issue naman. Long term, it's still okay.
Hmm. Pero April, in terms of consumer spending, hindi ba may bawi yan? I mean, lahat tayo naka-hooked up in our homes. Then pag okay na mag-mall, magmo-mall tayo lahat at kakain tayo sa labas lang.
Oh, may pent up demand.
Pent
Sana
up
nga
demand.
eh. Ang problema kasi, okay, let's go to the SARS example. Kasi
Mhm,
analyst na ako noon, by the way, nung nagka-SARS. So
mhm,
talagang naalala ko rin yung mga Pinoy friends ko noon na who were based in Hong Kong. Talagang takot na takot din sila. Tapos yung mga Hong Kong stocks, the valuation similar to what we're seeing today, ganito rin kadikdik. And then what happened was, okay, when SARS was finally over, what China did was, at that point in time, kasi the Chinese at that point weren't allowed to travel overseas yet.
mhm,
But because of SARS, ang ginawa ng government of China, they did a stimulus package where they allowed uh, mainland Chinese, to travel to Hong Kong a lot more often. And then the prices of Hong Kong stocks went up through the roof. As in, sobra, grabe. Hindi natin alam kung this time around, ganun din yung effect. Parang pent-up demand. Biglang, sige, akyat na.
mhm,
Or the governments will do a stimulus package similar to what they did during SARS. So, hindi natin alam. Let's see.
mhm, mhm. Okay. Ito, there's a question because there's a lot of talk that a vaccine is under development. So do you think that a vaccine will cause the market to, you know, rally back up?
Hopefully,
In,
hopefully. But of course, we don't know kung totoo ba yan. Di ba?
that's right. Oo nga. Next question, ma'am, is it okay to buy bank stocks during this time?
Um, I think naman, okay, as I've said a while ago, the global financial crisis, during that time, there was a systemic risk kasi yung, for example, 'di ba, ano nga ba yung palabas na yon? Yung The Big Short.
Mhm, mhm,
Remember that scene where si fund manager, I don't even remember his name, he went to a stripper bar and
mhm,
he was interviewing the stripper, and the stripper said, "Oh, I have 2 loans or 3 loans." Yung mga ganon, "I have my second
mhm,
home,
mhm,
third home." Wala tayo, wala tayong ganyan ngayon na nangyayari na the banks, because they could borrow derivative products and somebody was willing to insure them and the insurance company had somebody willing to insure them. Nagpautang ng nagpautang. Wala tayong ganun.
Mm.
In fact, anecdotally, pag pumunta ka sa bangko, subukan mong umutang, ang hirap-hirap dudugo yung ilong mo. Ang hirap talagang umutang. So, that said, I don't think we'll have the same problem or bankruptcy, systemic risk. And in fact, during the start of the year, we're talking about how positive we are about the Philippine economy. That really doesn't change. I mean, it's going to continue once everything seems all right. People can start working again. The tourists can come back in. I think they will come back in. The government will still do the build program, and jobs are going to be plentiful again. So I think okay naman. So yung risk na yung banks magkaroon ng massive NPL similar to the global financial crisis overseas, not here. I don't think that's going to be a problem. So if you want to buy banks right now, I don't see an issue. Definitely, it's an opportunity to buy them at a very cheap price right now.
Ito, April, I, I I guess one of the stocks that we really love, yung
Mm.
MPI.
Mm.
Ano, there's a question about MPI. Is it a good stock to invest in since they are into healthcare?
Nako, ang problema, eto lang, gusto ko lang sabihin, yung healthcare niyan, super small share na lang yan, ha. Hindi, it's not as much as it used to be because remember, they sold it already.
Mhm.
So it's more of a utility company at this point. But secondly, the stock is really so cheap. So I'm not telling you to sell it, but if you're buying it for the healthcare, it's not a healthcare play anymore at this point.
Okay. Okay. Ito ma'am, there's a question. If we are going to do peso cost averaging, what would be the time horizon we would be looking at?
Uh,
Um,
I guess the question means peso cost averaging for this crisis,
yes,
no?
during this
Not
crisis lang.
uh,
Siyempre long
mm,
term yan, di ba? Mm.
so siguro timingin natin hanggang mga June or July, no?
Mhm,
March,
mhm,
April, May, June. 4 or 5 months maybe, even 6. Kasi pwede naman, you could do like a 6-month program. But then when I think pwede nating i-combine yan with technical analysis eh. Kasi Juanes will indicate when the technical signals are showing that we are going to see a reversal. Whatever has not yet been deployed, you can deploy during that time. So maybe you could initially target, say, a 6-month peso cost averaging. Then, kung sabi natin, mas mabilis yung recovery, then you can deploy it already. Kung sabi natin, nagka-recovery na sa June or nagka-recovery na sa May, then you
mhm,
can
mhm.
deploy whatever's left when the technical signals become bullish already.
Okay. Ito, we're talking, nabanggit mo ma'am yung ating technical indicators for recovery. Meron ba tayong tall tale signs of a market bottom sa fundamentals?
Fundamentals, ayun
Meron
nga,
ba?
parang, I guess,
There's such a thing. Mm.
pag sinabi ng gobyerno, hindi, di ba yun nga yung Golden Cross Day nga eh.
Mhm,
That's one
mhm.
of the
Okay.
things na pababa na yung mga new cases relative to recoveries. And then, aside from that, the government slowly lift the quarantines or yun na nga, magkaroon tayo ng mga more testing kits, vaccines, yung mga ganon.
Mm.
So yeah, I think those are
Oh. And final question. Kanina April, you mentioned that for companies like JFC, mga big companies, mga blue chips natin, it's okay to cost average. But what about dun sa not as big? Like client here is asking about SSI, FLI, and Max. You know,
you
they've been hit
know,
hard. Yeah.
yeah, I know they've been hit hard, but that said kasi usually, okay, what's happening? What happens kasi there's a rotation. Usually during times like this when everything's cheap, mangyayari yung mga fund managers when they start buying, they will focus on blue chips muna. So mangyayari, when the market goes up, mauuna rin si blue chip. Ngayon, kaya in-advise
Mm,
namin blue chip, buy na lang blue chips and then afterwards, once you lock in your gains, you can switch to your small caps. Usually may ganong rotation eh. Blue chips muna, tapos pag naging mahal si blue chip, lipat sa second line, second liners. After mag second liners, then they go to the third liners or the small
mhm.
caps.
All right. Thank you very much, April. Ladies and gentlemen, thank you very much for asking these beautiful questions. We'll please allow us around 24 hours to respond to all these, and we'll make sure that they are available for your consumption later on. Thank you very much, April, and thank you
Okay, thank
everyone
you.
for the Q&A portion. Again, if you need any guidance or assistance, we're very much happy to help. Just send us an email through helpdesk@colfinancial.com. For COL Premium customers, you can also reach your client experience managers. Now, if you don't know who your CM is, you can just click the Need Help button on your COL account and you can get in touch with them through email and their mobile numbers because currently they're all in a home working arrangement. You can also try to engage us in our social media platform. We have our avatars there who are most happy to answer your questions. Plus, please take note that COL Premium Official is exclusive to COL Premium customers. Now, I'd like to also do a short plug of our new tool that I think we're offering to all our customers. It's COL Advantage. So you can get the latest information on the stocks that you follow. What I personally love in COL Advantage is the stoplight system where you can see the value, momentum, and sentiment rating of a company. Kanina may tinanong sa atin about JFC ito. If I may just share my screen also. Ayun, sorry. Can I share my screen? Uh, Ayun, show my screen. So for instance, ito, in Sewell Advantage, you have this very nice security view which you can search on the top. For instance, kanina may nagtanong, what is the valuation of JFC? Then you can just type here JFC, then you will be transported here. Ito yung sinasabi ko sa inyong VMS indicator value momentum sentiment for JFC. And at the bottom, we also have a short tool there called the value range. So unlike kay April, I think what April uses is the 10-year average, but this tool particularly uses the 5-year average lang. So if the average of JFC in terms of PE is 41.08, I think the actual based on the most recent uh, uh, in investment guide is 29.8. So it's more than two standard deviations below. So there are a lot of tools there. I invite you guys to explore it, register now for your account, and just let, let us know that you're a premium customer. Unfortunately, this system is not connected to our main website, so you have to chat with us and tell us the name that you used to your COL financial account. Okay? And also don't forget to okay na po. Uh, also don't forget to um, subscribe to our YouTube page for some educational and investment videos and also to view a recap of what just happened. And after this, guys, I would like to also ask for your participation on a 2-minute survey that we will send after this webinar to help us improve on our future online seminars. Okay, and we look forward to reading your valuable feedback. All right, so with that, again, thank you very much. To exit the session, please uh, i-X nyo na lang yung button and we'll see you soon on the next episode. Thank you.